Okay, wow. You've given us a really interesting mix of sources today, touching on real estate investing, the future of robotics, and even how weather impacts the stock market.
Mm.
We're here to help you pull out the most fascinating insights and see how they connect.
It is really interesting to see how it all kind of comes together. What seems unrelated on the surface actually reveals some really important things about the investment landscape right now.
Yeah, for sure. So maybe let's start with what seems to be top of mind for you, and that's real estate.
Okay.
One of your sources talks about this house hacking strategy. Have you heard about this before?
Yeah, house hacking. It's a pretty smart way to enter the real estate market, especially if you're just starting out. Basically, you buy a multifamily property, live in one of the units, and rent out the others. Then the rent that you get from the tenants helps cover your mortgage and sometimes even generates extra cash flow.
Yeah, there's even a story about a guy named Henry Washington.
Oh, yeah.
He was trying to convince his wife to try house hacking by showing her how much faster they could get their dream home using this method.
It's a great example of how you can accelerate your path to actually owning your own home.
It does sound pretty convincing.
Yeah. But, like with any investment strategy, house hacking is not foolproof. It depends a lot on what the market's doing where you live. In some of the really expensive cities, renting might still make more sense financially, at least for now.
Right. And I also see in your notes that you mentioned being a little hesitant about sharing walls with tenants,
Sure.
which I totally get. I lived in
Yeah.
a townhouse for a while, and I did enjoy the community aspect, but I really did miss having my own separate space.
That's fair. But the good news is that you don't have to go it alone on this journey. The real estate world is just full of resources, and communities that can offer support and guidance.
That's true.
For example, you mentioned Bigger Pockets forums. That's a fantastic place to connect with other investors and just, learn from their experiences and just get your questions answered.
Absolutely. And I think it's easy to underestimate the power of finding a mentor, too. Someone who's walked the path you're on. They can offer really valuable insights,
Mm.
maybe help you avoid some common pitfalls.
Yeah,
And they can offer that much needed encouragement, too, when things get a little bit tough.
for sure. And on the subject of innovation, one thing that could have a big impact on your real estate decisions is the rise of robotics.
Oh, right. You're talking about self-driving cars.
Yeah, exactly.
One of the articles you sent features Jensen Huang, the CEO of Nvidia.
Uh-huh.
He predicts this is just the beginning of a consumer robot revolution.
Yeah,
He actually said that industry already brings in $5 billion for Nvidia.
that's right. And what's interesting here is that this growth isn't just about investing in Nvidia stock. It's about understanding how this is going to completely reshape the world around us, including real estate. Just imagine those areas where self-driving car companies are setting up shop. That's going to drive property values way up.
Yeah, you're right. It's not just the cars themselves. It's the whole ecosystem that's going to grow up around them.
Exactly. Tons of investment opportunities. You got to look beyond the obvious companies. Think about the companies that are going to be providing all the infrastructure for autonomous vehicles.
So the companies that are building the sensors, the data management systems, the charging stations, all of that.
Exactly.
So thinking ahead could lead to some really interesting investment opportunities. Now, get this. One of your sources actually explores this fascinating connection
Mm-hmm.
between the weather and the stock market,
Yeah.
which, at first glance, it seems kind of random.
Yeah.
But when you think about it, it actually makes a lot of sense.
It does. It really shows how everything is connected. Take Winter Storm Blair, for instance. This was a recent storm that knocked out power across the Midwest. Businesses shut down, daily life was disrupted in a huge way.
Oh, yeah, I remember that storm. It seemed like everyone was rushing to Home Depot and Lowe's, like stocking up on supplies before things got really bad.
Exactly. And those stores saw a huge jump in sales because everyone was preparing for the worst. But on the flip side, insurance companies were bracing for just a wave of claims coming in, which could end up meaning higher insurance premiums for everyone.
Right? And what about energy prices? I bet those went way up with everyone cranking up their heat during those freezing temperatures.
You're right. They did fluctuate quite a bit, both because of increased demand, but also potential supply disruptions because of the damage from the storm. Recognizing these random events and how they can impact different industries, well, that's really vital for making good investment decisions.
So it's not just about looking at a company's numbers or just market trends, but it's about factoring in these other broader factors too,
Uh-huh.
things that might not be so obvious at first. It's a good reminder that the market is always changing, and sometimes even the weather can play a role.
It definitely can. And speaking of things that can influence the market, let's talk about behavioral finance.
Okay.
This is a fascinating area that looks at how psychology plays a role in how people invest their money.
Ooh, I've heard a little bit about this before. It's the idea that our emotions can sometimes lead us to make bad decisions with our money, right?
Exactly. We like to think of ourselves as rational, especially when it comes to money. But the truth is, we are all susceptible to these cognitive biases and emotional triggers and things like that that cloud our judgment.
So how do we become aware of those biases? They feel like they're working on us subconsciously.
That's a great question. Well, the good news is you don't need like a psychology degree to become a more mindful investor. Just acknowledging that these biases exist is a big step. Then you can start to try and identify like how they might be affecting your own decision making.
So for example, let's say you're reading a bunch of really positive news articles about a certain stock, and that's making you feel really optimistic about it.
Yeah.
That might be a good time to just stop and ask yourself, okay, is this optimism based on like solid research that I've done, or am I just getting swept up in all the hype?
Exactly. And one thing you can do is try to get different perspectives. Don't just rely on one source of information. Read articles from a few different analysts or listen to podcasts with different viewpoints. Even just talking with other investors about it, that can really help. This way you're challenging your own assumptions and getting a more complete picture.
Yeah, it's like getting a second opinion before you go through a major medical procedure or something. You want to make sure you're considering all the angles.
Exactly. And another classic bias is it's called the herd mentality. Basically, we all have a tendency to follow the crowd. We assume that if everyone else is doing something, it must be the right thing to do. But you got to remember, the market is driven as much by emotion as it is by logic.
Oh yeah, for sure. You see this all the time with different trends and fads. Suddenly everybody's buying a certain stock or investing in some asset class, and it's really easy to get caught up in all that excitement. You kind of lose sight of your own goals and your own risk tolerance too.
Exactly. So when you notice like a surge of popularity around a particular investment, it's always good to ask yourself, is this really being driven by strong underlying fundamentals? Or is it just speculation? Are people just chasing returns without really understanding the risks?
That's a really great point. And speaking of risk, I mean, obviously everybody has a different level of risk that they're comfortable with. What might seem like a perfectly reasonable risk for one person could be completely terrifying to someone else.
Oh, absolutely. This goes back to what we were talking about before with house hacking. Finding a strategy that really fits your own personal goals and comfort level. There's no right or wrong answer when it comes to how much risk you take on. The important thing is to be honest with yourself about what you can handle.
Yeah, there's no point in chasing high returns if you're going to be stressing out all the time about your investments.
hmm
I mean, investing should help you build wealth in a way that feels sustainable and fits with your values.
It's interesting. We were talking about Henry Washington and how he convinced his wife to do the house hacking thing. That's a good reminder that investing isn't just about the numbers and the charts and stuff. It's really about people,
Yeah.
their dreams, their hopes, their fears for the future.
That's so true. It's easy to forget about that sometimes.
It is. Investing isn't just like a theoretical exercise. It has a real impact on people's lives, especially when you're talking about shared finances or even like living arrangements. You really need to communicate openly and honestly with everyone involved.
Exactly, yeah. It's about coming up with a strategy that everybody feels good about.
Uh-huh.
And sometimes, like in Henry's case, you have to figure out how to present the information in a way that speaks to people's concerns. For him, it was about showing how house hacking could actually help them get to their dream home faster.
Ah,
That's what got them both excited about it.
yeah, it was. And that's a good reminder, too, that investing really is a journey. It's not just a destination, you
Yeah,
know?
yeah.
It's about making decisions along the way that make sense for your goals and your values, both as an individual and as a family, too.
It is. Now, let's talk a little bit about this whole explosion of artificial intelligence.
Sure.
I mean, it's impacting all sorts of industries
Mm-hmm.
these days, right?
Yeah.
Including investing. We touched on self-driving cars earlier. But AI is transforming everything. Healthcare, finance, manufacturing. The list goes on.
It really is.
It's already shaping our world in huge ways. And, like any really transformative technology, well, it's both a huge opportunity for investors, but it also poses some challenges.
It does.
So, I mean, where do we even begin to understand this? Like, should we all be running out and buying up stock in every AI startup we can find?
Well, that's where things get a little tricky. The potential is definitely there, but there's also just a ton of hype and speculation surrounding AI right now. So it's really important to, separate the signal from the noise. You have to approach AI investments with the same careful thought and research you would any other investment.
So don't just jump on the bandwagon because everyone else is talking about it.
Right.
You really need to understand what the underlying technology is and then assess, how realistic are the companies that you're thinking about investing in.
Exactly. And this is where diversification comes in again. Don't put all your eggs in one basket, especially with a new technology like this. You want a mix of assets, different industries, different sectors. It helps lower your overall risk, and it can actually boost your returns too.
Yeah, it's like having a balanced diet for your investments. You're making sure you're not getting too much of any one thing.
Right. And there was an interesting example in your source material that really highlights this, the impact of AI on the advertising industry.
Oh, yeah. That snippet of it, the company Fubo,
Mm-hmm.
it's a streaming service, right?
Mm-hmm.
And they're using AI to make sure they're showing you the right ads.
That's it. This is a perfect illustration of how AI is disrupting all these old business models, and it's creating these totally new avenues for growth. So in this case, they're using AI to tailor ads to each person's individual preferences. They can increase engagement and boost their revenue. Pretty smart.
It is. So for investors, this is a sign like you got to pay attention to these companies that are embracing AI
Yeah.
and find those innovative companies that are integrating this technology into their business, right?
You got it. It's not just about investing in AI companies directly. It's also about recognizing that this is going to transform whole industries and finding those companies that are positioned to benefit from it.
So having that broader perspective is really important, seeing all the connections and understanding how these technological changes are going to ripple out.
Yeah. Yeah. It's not always about picking the hot stock of the moment. It's more about recognizing the underlying trends that are going to shape the future.
Right. Okay. And speaking of trends, maybe let's go back to something that's come up a few times already.
Yeah.
How important community and mentorship is for investing.
Yes. We talked about how important it is to find mentors, experienced investors who can guide you,
Yeah.
especially when you're just starting out.
Yeah.
And it's not even just about the advice, it's having that support system, other people who understand the ups and downs of investing. You can all share your knowledge and experiences and even, commiserate together when things aren't going great.
Right. Because investing can feel pretty isolating sometimes,
Mm.
especially if you're around people who aren't into, finance.
Yeah.
So finding like-minded people can make the whole journey a lot more enjoyable and probably more successful in the long run.
It really can. Those bigger pockets forums you were talking about. That's a great example of how technology can connect people and build a real sense of community, even if you're all over the country.
It really is. It's like having this virtual mastermind group right there at your fingertips. You can ask your questions, share your ideas, and just learn from all these other people who are dealing with the same challenges you are.
Exactly. And, don't forget about those real-world meetups, too.
Oh, yeah.
Sometimes there's just no substitute for meeting people face to face.
Yeah, for sure. Being in a room with people who share your passion, that's just so energizing.
It really is. Now, I want to shift gears just for a second and talk about something that often gets overlooked when it comes to investing, and that's the emotional side of it.
Okay. What do you mean the emotional side of investing? I always thought it was supposed to be all logic and numbers.
Well, yeah, there's definitely that side of it, but it's also about more than just the numbers and the charts. It's about our hopes and dreams for the future, our fears. It's about our relationship with money, our sense of security, all those kinds of things.
I guess I never really thought about it that way.
Yeah.
But yeah, money is definitely a loaded topic for a lot of people.
It really is.
It's tied to our self-worth, our ideas about success,
Yeah.
even stuff that happened to us when we were kids.
Absolutely. And all those deep-seated emotions can really influence how we approach investing. Like for some people, investing triggers all sorts of anxiety. They might worry about losing everything or making a big mistake.
Yeah, that makes sense. Especially if they've been through some tough financial times in the past.
Right.
Those experiences can definitely stick with you.
They can. And then for others, investing might bring up feelings of excitement, and possibility. They see it as a way to reach their goals, build a good future for themselves and their family.
Yeah, okay, so we've got all these emotions swirling around.
Yeah.
How do we make sure they don't end up hijacking our decisions? How do we find that balance?
That's a really important question. A lot of it comes down to self-awareness, recognizing those emotional triggers, and then finding ways to to manage how we react to those.
Can you give me an example?
Sure. Let's say you notice yourself getting really caught up in some hot new investment trend.
Oh, yeah.
That's a good time to step back and ask yourself, okay, am I really making this decision because it fits into my long-term goals? Or am I letting fear or greed, take the wheel?
Right, like, am I just reacting emotionally or am I really thinking this through?
Exactly. Sometimes it can even be helpful to reach out to a financial advisor
Oh.
or even a therapist.
Hmm.
They can provide that outside perspective you need sometimes and help you work through these things in a healthy way.
So it's kind of like having a coach in your corner, helping you stay on track.
It is. One of the things your sources talked about was this idea of impact investing.
Oh, yeah, I've been hearing more about that lately.
Yeah, it's getting really popular.
It's this idea that you can use your money to support companies that are making a positive difference, right?
That's right. And it's not just about feeling good. Studies have actually shown that impact investments can do just as well or even better than traditional investments.
Wow, so you're not even sacrificing returns, you're just like aligning your investments with your values.
Exactly. And there are all kinds of ways to do it,
Yeah.
You could focus on companies working on climate change or social justice or maybe sustainable agriculture.
Right, so many options.
The important thing is to find something that really speaks to you.
It's about making your money work for you, not just financially, but like ethically too. Making a statement about what you believe in.
Exactly. And now I want to circle back to something we've touched on a couple of times already, managing risk.
Okay.
One of your sources talked about diversification, remember?
That's about spreading your investments out, right? Different asset classes, industries, geographic regions, so you're not putting all your eggs in one basket.
That's it. It's like creating a safety net for your portfolio. So if one area isn't doing so well, you've got others that can help cushion the blow.
Right, it's about balance.
It is. The other thing that's really important to consider is your time horizon.
Yep.
How long are you planning on investing this money for? So, for example, if you're investing for retirement, you've got a longer time horizon, right? You
Okay.
can afford to take on a little more risk. But if you're saving for a down payment on a house and you need that money in a couple of years, well, you're going to want to be more conservative.
Makes sense. The longer you have, the more time you have to bounce back if things go wrong.
Exactly. And remember, risk isn't just about losing money.
Okay?
It's also about missing out on potential gains. If you're too conservative, you might miss out on opportunities to really grow your money.
Yeah, it's all about finding that sweet spot, that balance between risk and reward. And that's going to be different for everyone, depending on their situation.
It is. Now, one of your sources mentioned how important it is to stay informed, keep up with market trends, economic news, all of that.
Oh, yeah, absolutely. It's easy to get overwhelmed, though. Every day there are new headlines, new predictions. How do you sift through it all and figure out what really matters?
That's a great point. It really helps to have a system.
Okay.
So start by figuring out which sources you trust. Whether it's financial news websites or industry publications or podcasts like this one.
Well, thanks. I'm glad you think we're a reputable source.
Mhm.
But really, you're right. It's so important to be careful about what you're reading and listening to.
It is, and don't be afraid to ask questions. If you don't understand something, don't just pretend you do.
Hmm.
Reach out to your advisor or your mentor or even just other people in those online communities you're a part of. The more you know, the better decisions you're going to make.
Yeah, it's all about being a lifelong learner, right? Always be curious, keep up with what's going on in the world. The market's always changing, so we have to change with it.
We do. Now, I want to touch on another resource that can be really helpful. Financial advisors. A good advisor can work with you to create an investment plan that fits your needs. And they can offer support and, just keep you accountable.
I've heard mixed things about advisors. Some people love them, some people think they're a waste of money. What do you think?
It really depends on you. If you're just starting out or maybe you feel a little overwhelmed by everything, well, an advisor can be a huge help.
So it's like having someone to hold your hand through the process.
Kind of. But it's important to find someone who's a good fit.
Okay.
Make sure they understand your goals, how much risk you're comfortable with, and what you believe in.
Right.
And don't be afraid to ask about their fees, too, and how they get paid. You want to make sure everything's transparent.
Transparency is so important. You want to make sure you're both on the same page,
Yes.
that they're really looking out for your best interests.
Absolutely. Now let's talk a little bit about online investing platforms. These have become really popular lately.
Oh, yeah, I've seen a lot of ads for those.
Yeah, they're everywhere, and they're making investing a lot more accessible, especially for younger people.
It seems like they're making it easier and a lot less intimidating, too.
They are. And they can be a great option if you're comfortable managing your own investments and you're looking for a low-cost way to get started. But you still have to do your homework.
Right.
Choose a platform that's got a good reputation, make sure it's secure, and always remember you're the one making the decisions.
So they might make it easier, but you're still the one who's ultimately responsible.
That's right. And speaking of education, I want to bring up something we've talked about throughout this whole conversation.
Yeah.
The importance of always keep learning when it comes to investing.
Oh, yeah. Always learning. Staying up to date on all the latest trends, all the new technology, and how everything's changing, right?
That's it. The investment world is always changing, so the more you know, the better off you'll be. Whether it's reading books or going to webinars or listening to podcasts, just make learning a part of your investing routine.
Yeah, it's like any other skill. The more you do it, the better you'll get at it.
Exactly. Now, I want to talk a little about the psychology of decision-making. We touched on this with behavioral finance, but I want to dig a little deeper here.
Okay, yeah, I'm really fascinated by this stuff, like how our minds can trick us, especially when it comes to money.
Well, one of the big ideas in behavioral finance is something called cognitive bias.
Okay.
Basically, these are mental shortcuts that our brains use to process information quickly. The problem is they can sometimes lead to irrational decisions.
So our brains are trying to help us out, but sometimes they end up doing the opposite.
It happens. So, for example, there's something called confirmation bias.
Okay.
This is where we tend to look for information that supports what we already believe and ignore information that doesn't.
Oh, I do that all the time.
Hmm.
Like, I'll find an article that supports my opinion and think, see, I told you so, but I probably ignore all the articles that say the opposite, right?
That's exactly it. And that can be a big problem when it comes to investing. If you're only looking for information that confirms your ideas, you're going to miss those warning signs.
So you're basically putting on blinders and only seeing what you want to see.
Right. So one way to fight this is to actively seek out different points of view. Try to challenge your own assumptions. Read articles from people who disagree with you. Listen to podcasts that offer different perspectives. Talk to people who see things differently. It's kind of like having a devil's advocate on your shoulder.
Huh. That's a good way to put it. Okay, what else?
Well, another common bias is called loss aversion.
Loss aversion. Okay.
This is where we feel the pain of losing money more strongly than the pleasure of gaining the same amount.
So we're more motivated to avoid losing than we are to win.
Exactly. And that can make us do some pretty irrational things. Like people will sometimes hold on to investments that are losing money for way too long because they don't want to admit defeat. They don't want to sell and make that loss real, even if it would be smarter to just cut their losses and move on.
Right. So we're emotionally attached to our investments, even the bad ones.
Yeah, we can be. One way to deal with this is to try to stay focused on the long term.
Okay.
Remember what your goals are and why you chose these investments in the first place. Don't get too caught up in the day-to-day ups and downs.
Right. It's about keeping your eyes on the prize.
Exactly. And remember, every investment carries some risk. The key is to understand those risks and to manage them in a way that makes sense for you.
Right. Well, this has been such an incredible deep dive. I feel like I've learned so much. It's really amazing to see how all these different pieces fit together. Real estate, technology, psychology, even the weather.
And it's pretty fascinating how it all connects, isn't it?
It is. And, one of the biggest takeaways for me is that investing is about so much more than just numbers and charts. It's about people, their hopes, their fears, their dreams for the future.
That's a great point. It's about making your money work for you in a way that feels good, both financially and ethically.
Yeah, absolutely. Well, I think we've covered just about everything. Any final words of wisdom for our listener before we wrap up?
Just remember, investing is a journey. It's not a destination. It's about constantly learning and adapting, There are going to be challenges along the way, but if you stay focused on your goals, manage your risks, and stay informed, you'll be well on your way to creating that brighter financial future for yourself and for your loved ones too.
Such a great message. It's about embracing the journey, staying curious, and never stopping learning. Well, thank you so much for joining us today and sharing all these incredible insights with us.
It was my pleasure.
And to all of you listening out there, thank you for being here. Remember, this is your journey. Define your goals, do your research, find people you trust to guide you, and most importantly, enjoy the ride.
Happy investing, everyone.
This has been The Deep Dive. Until next time.